If I told you the biggest discounts in today's housing market aren't coming from desperate homeowners, they're coming from billion-dollar home builders, would you believe me? Because that's exactly what's happening. For years, buying a brand new home usually meant paying a premium. New construction was the expensive option. Today, in many parts of the country, builders are quietly becoming the biggest discounters in real estate. They're cutting prices, they're buying down mortgage rates, they're paying buyers closing costs. Some are even throwing in thousands of dollars in upgrades just to get homes sold. And here's the interesting part. Most homeowners aren't doing any of that. So why would a billion-dollar home builder be more willing to negotiate than your neighbor who's selling their house? The answer explains almost everything happening in the housing market right now. Because today's market isn't being driven by buyers. It isn't even being driven by mortgage rates. It's being driven by two completely different types of sellers who are playing two completely different games. The biggest discounters in real estate aren't homeowners anymore. They're builders. To understand why builders are discounting so aggressively, you first have to understand why most homeowners aren't. You've probably heard the phrase lock-in effect, but I don't think most people realize just how powerful it's become. Here's the number that explains today's housing market. About 82% of homeowners with a mortgage have an interest rate below 6%. Millions of people are sitting on mortgages with rates of 3, 4, even 2.5%. Now compare that to today's mortgage rates. If those homeowners sell and buy another house, their monthly payment could jump by hundreds or even thousands of dollars. So what do? They stay, they remodel, they postpone moving, anything except giving up that mortgage. And that's exactly why existing home inventory has stayed so tight. Now here's where the story changes. Because builders don't have that luxury. A homeowner can decide to wait another year before selling. A builder can't. Every completed home sitting on the market is costing them money: property taxes, insurance, construction loan interest, maintenance, every single day. Which means builders aren't optimizing for the highest possible sale price. They're optimizing for something completely different: speed. Here's what happened. During the pandemic housing boom, builders couldn't build homes fast enough. Demand was exploding. Mortgage rates were below 3%. If you were a builder in 2021, the biggest risk wasn't building too many homes. It was not building enough. So they hired more crews, started more communities. And then the market changed. Mortgage rates nearly doubled, affordability collapsed, buyer traffic slowed, but construction doesn't stop overnight. At the beginning of 2022, there were only about 32,000 completed new homes sitting unsold. By the end of 2025, that number had climbed to 134,000. It more than quadrupled. Imagine you're the CEO of a home building company. Every one of those homes is costing you money. The capital tied up in that house can't be used to build the next one. For a builder, an unsold home isn't just inventory. It's a monthly expense. Builders don't think like homeowners. They think like retailers. If inventory starts stacking up, you don't wait. You move product. According to the National Association of Home Builders, nearly 2 out of every 3 builders were offering incentives by late 2025. Not free welcome baskets, real incentives, price reductions, mortgage rate buydowns. Sometimes it's smarter to discount the financing than the house itself. That's where the story gets really interesting. Builders have figured out something most homeowners haven't. Imagine you're borrowing $400,000. A 1% reduction in your interest rate can lower your monthly payment by more than $200 a month. Over the life of a 30-year mortgage, that can add up to more than $80,000 in savings. Builders prefer incentives because lowering the list price creates a problem with comparable sales. They keep the headline price looking strong, while quietly giving buyers value somewhere else. Closing cost credits, flex cash, interest rate locks. Now compare that to someone selling an existing home. Most homeowners only have one lever: price. They can't offer you a below-market mortgage, they don't own a lending company, and emotionally, they don't want to discount anyway. For a homeowner, it's personal. For a builder, it's business. Their job is to maximize the return on an entire community. That's why builders are often willing to negotiate while homeowners hold firm. The biggest opportunities are concentrated in markets that built the most homes during the pandemic. Think Florida, Texas, Arizona. These are markets where builders are competing for buyers. That creates choice. And when buyers have choices, negotiation comes back. If you're shopping in a market with a lot of new construction, don't just compare floor plans, compare the total deal. Ask about mortgage rate buydowns and closing cost assistance. Run the numbers. The monthly payment is what you'll actually live with. If you're selling a home, know what you're competing against. If a builder is offering a lower rate and upgrades, your resale home is competing against the entire package. Pricing strategy has never been more important. The housing market isn't moving in one direction anymore. Some markets are competitive, others are balanced. Builders have quietly become the biggest source of discounts. Stop following national headlines. Start following your local market. If you found this helpful, subscribe for more data-driven housing market analysis. And if you're wondering how competitive your local market really is, visit Primpted.com and check your local sold score. The best decisions start with local data.